Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. It remains unclear what happens next after the chaotic round of US tariffs on their closest trade partners, and then their unexpected suspension. But first up this morning, we can report a strong dairy auction result, with prices up 3.7% in US dollar terms, up 4% in New Zealand dollar terms. The key whole milk powder price was up 4.1% in US dollar terms. It is now sitting much higher than the anticipated $4,000 US dollar level. There are a couple of key factors at play today. First, despite rising New Zealand production, the volume of product on offer was down, and along with lower US and Australian milk production, there is a supply squeeze. And secondly, there was a strong pre-Ramadan buying, although not as much from China as anticipated. Where each component has landed can be checked in our dual currency charts that also interleave the pulse results for skim milk powder and whole milk powder as well. And there are some new high benchmarks achieved today, especially for whole milk powder. And yes, the strength of this auction will have analysts reassessing their payout forecasts, but they will probably hold back because of where we are in the season. However, the base is now quite strong. US job openings fell by 550,000 to 7.6 million in December, to a lot less than anticipated, indicating a definite cooling in the American labour market. Clearly, employers were uncertain about how the post-election landscape would play out. And this came well before the aggressive purging of federal government jobs now underway. Perhaps worse, new orders for manufactured goods sank almost 1% in December from November, extending a revised 0.8% drop in the previous month, and firmly below market expectations of a lesser decline. It was the sharpest monthly drop since June. But retail sales were up 5.7% last week in the US from the same week a year ago on a same-store basis, and that was an improvement. However, you have to wonder whether this rise was motivated by buying ahead of expected price rises flowing from the signalled tariff increases. Surging inventory levels have seen the US Logistics Manager Index jump in January from December to its fastest expansion of the logistics sector since June 2022. Underlying growth and uncertainty surrounding trade regulations, particularly the tariffs on Mexico, Canada and China, drove the defensive inventory moves. On the trade front, the US delayed its tariff impositions on both Mexico and Canada by a month, but China set in motion its retaliation, a mixture of its own countervailing tariffs, especially on coal, oil and natural gas, plus major investigations of Google, Nvidia and Intel. It also banned exports of some key minerals. But analysts think there is more symbolism here than hard penalties. They are being saved for later in the game. In Canada, consumer boycotts may have a bigger effect than official retaliation. Other major economies are also readying their retaliation, including Japan and the EU. If all of them act in unison, the impact of just these 5 big trading blocs will be substantial for the US and, of course, themselves. China thinks it can win the trade war with the US by just letting the yuan sink. In fact, all currencies versus the US dollar are falling. That way, imports become cheaper for US buyers and US exports become more expensive and less attractive to overseas customers. It is lose-lose for the US. Trump is fighting natural market forces with unnatural tariffs. Join us at 10:45 this morning when we report the fourth quarter 2024 unemployment rate. Markets expect it to have risen to 5.1% from the third quarter's 4.8%. Any variance from that will have implications for the February OCR review due on the 18th of this month. The US Treasury 10-year yield is now at 4.52%, unchanged from this time yesterday. The price of gold will start today at $2,840 an ounce, up $23 from yesterday and a new record high. And oil prices are virtually unchanged again at just on $72.50 a barrel in the US, while the international Brent price is now at $76 a barrel and a tad firmer. And the Kiwi dollar is now at 56.2 US cents, up 20 basis points from yesterday. Against the Aussie, we're down 20 basis points at 90.3 Australian cents. Against the euro, we're up 10 basis points at 54.4 euro cents. That all means our trade-weighted index starts today at just on 66.9 and up 20 basis points from yesterday. And the Bitcoin price starts today at $99,502 and up a minus 0.6% from yesterday. Volatility over the past 24 hours has been moderate at plus or minus 2.2%. And we should note, finally, that tomorrow, Thursday, February the 6th, is a public holiday in New Zealand, and there won't be a breakfast briefing edition. It will return on Friday. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Friday.